Hi, everyone. My name is Tyler Olsson. I am one of the production directors here at Reimagine 2020. Welcome back to another edition of Reimagine 2020 virtual events, where, as you may know, at this point, we get to showcase some of the leading developments in the blockchain and cryptocurrency world by talking with those who are actively building and conducting business within the space. This particular event is now our fifth event, and this one is themed Happy HODL Days. And we're, of course, here playing off of the crypto meme to hodl or hold on for dear life. And we also want to celebrate the holidays and what, in my opinion, it has actually been a successful year, at least for the cryptocurrency world. And I would like to sort of, hear some of the insights of the people that we have the pleasure to speak with concerning their reflections on the year 2020. In case you've missed it, any of our previous interviews can be found on our YouTube channel, Reimagine 2020. And of course, be sure to follow us on all of the relevant social media channels at Reimagine_2020. And lastly, be sure to check out our podcast series at Bitcoin Radio, which is on Spotify, where you can hear all previous and future interviews to date. Now, joining me today is Joshua Frank. Joshua is the co-founder and CEO of The Tie. Joshua, how are you doing today? Where are you in the world? And maybe you can sort of drop on me what you're most excited about in the world of crypto these days.
Yeah, thanks for having me on, Tyler. I'm calling from beautiful, sunny Southern California. I live here now. I'm a New Yorker, and lived in Canada for 5 years. So grew up in the cold. Kind of came out here and enjoyed the warmth. And now that it's 60 degrees here, I feel like I'm freezing. But relatively speaking, it's sunny and beautiful. In terms of what I'm excited about in crypto. I'm really excited about, and we've done some research on this, which has been in Bloomberg and a few other places, on basically the fact that crypto is back near all-time highs, or Bitcoin, not crypto. Bitcoin is back near all-time highs, and no one's talking about it. That's the most exciting thing for me. The fact that this time around, this rally has been driven increasingly by institutional interest, institutional demand, by long-term buyers, and the fact that we haven't seen that. We're starting to see, finance TikTok make a little bit of a rise onto the scene, and we're seeing crypto Twitter make a bit of a comeback. But if you look at where we are now versus where we were in 2017, I mean, in terms of tweet volume, we're at about 30% of the mainstream retail interest that we're at in 2017. The number of mainstream media headlines on crypto are way down. And so what I'm really excited about is the fact that we've come this far with just an institutional rally. And kind of given the coronavirus situation and all the uncertainty there, given the macro and economic uncertainty and all the stimulus all around the globe, the fact that I think institutions will increasingly, continue to allocate to crypto. And now we're going to, I believe, start to see a giant retail wave. And I'm interested in seeing kind of how those two factors, coincide with one another.
Sure. And, you mentioned that there's a lot of institutional interest in crypto right now. I think that, and you can correct me if I'm wrong based on sort of what I think that the biggest wave right now, at least, is those players looking to Bitcoin, right? And kind of trying to capitalize on the store of value proposition. If that's true, that leaves an entire market underneath the king, if you will, that is kind of untouched by sort of big money. What do you think is the timeline? I mean, like what sort of lag time will we see before those types of players work their way into the altcoin market?
Yeah, so certainly this interest is almost entirely in Bitcoin. If you look at where the funds are flowing, right, they're flowing into GBTC, right, because you can not only get exposure to Bitcoin, but you can also get the premium on top of NAV. They're flowing to new products like 3iQ's Bitcoin fund. And they're flowing. Pantera just raised $134 million for a Bitcoin fund. So certainly those funds are flowing into Bitcoin. The challenge for institutions is, beyond the fact that many of these altcoins may not have any value whatsoever, the challenge is they're just not liquid, right? So actually being able to allocate to them, being able to trade them is very difficult. So we've seen a number of quantitative hedge funds that are raising a large amount of capital. Pythagoras, for example, a couple months ago, very quietly raised about $250 million. The challenge is with those, even if institutions are allocating to quantitative hedge funds that aren't necessarily just trying to capture Bitcoin's value, they're more just trying to take advantage of market inefficiencies. The biggest challenge is just the fact that you can't trade some of these assets, right? If you go to CoinMarketCap or CoinGecko or wherever else, and you go number 50 or number 100 down the list, the real trading volume on that asset may be in the millions of dollars a day, right? We're talking about institutions now that are going to be taking $500 million positions in crypto, and you can't take a $500 million position in altcoins. So I think we'll certainly see some capital flow into kind of more fundamental discretionary funds like your metastables and your ARCAs that are trading altcoins as well, and that are trading DeFi tokens. But I think for the most part, this is going to be Bitcoin interest, and I don't think that necessarily is ever going to translate into altcoin interest. I don't think it has to.
Sure. Yeah. And as you mentioned, it seems like one of the things that might be lacking in the sort of altcoin space, generally speaking, is a sort of non-arbitrary way to discern what fundamentals count in favor of an investment versus, what, fundamentals or lack of fundamentals would count against it. So to sort of put a pin in that really quick and to maybe get us there, let's kind of back it up, because I know that sort of this is what y'all are doing at the TIE, right? Y'all are sort of homing in on a lot of the data that drives market sentiment. So maybe you can share, for those who may be unfamiliar with yourself and the TIE, kind of what your personal background is. How did you get interested in the space, and kind of that can lead us up into where you are now with the TIE and kind of what the TIE is doing.
Yeah, and I think to your point there, before we even go into that, kind of speaking about fundamentals and things like that, a lot of the people that are allocating to crypto now don't know anything about altcoins. It's not even a question of them not seeing value. They just don't know about these things, right? They're still figuring out Bitcoin, right? And I think this store of value narrative is sitting well with them. But most of these institutions cannot tell you the difference between EOS and Bitcoin Cash or XRP or anything else, right? And certainly we'll see capital flow into that area, but a lot of these are just bigger institutions that are looking to gain Bitcoin exposure and not even trade the market. So kind of to us, into the TIE and what we do. So my background is I'm young, I'm 25, so graduated from college, went on to work at a company called SS&C Technologies, which is one of the largest providers of mid-back office financial technology. It's probably one of the largest $30-40 billion companies that nobody's ever heard of. But they do a lot of the mid-back office stuff for banks and asset managers and custodians, et cetera. And so basically I was working in post-trade settlement technology, which is super boring, which is why I'm not going to talk about what that means. And because it was super boring, I was, both using sentiment data, or basically the wisdom of the crowd or investor emotion, to build models to predict the price movement of stocks, and day trading crypto. And kind of put two and two together. I'm like, hey, if I can use sentiment data to predict the movement of a stock when a stock has earnings and dividends, right? There's something fundamentally there. Well, in the case of crypto, especially, this was in 2016, 2017, where there's nothing fundamentally driving the value of a crypto, right? Then the largest thing is sentiment, right? And the wisdom of the crowd and investor emotion. So basically decided to quit my job and start this company called The TIE. And long story short, we partnered with this company that's the leading provider of sentiment data in traditional financial markets. So they provide sentiment data to all the largest traditional, quantitative funds, and, managing hundreds of billions, if not trillions of dollars at this point. Basically took all the tech that they had built over the last decade, brought it into crypto, and combined it with domain expertise. So really started as a sentiment data company, trying to service institutions in the space. As we got started, we very quickly realized that, institutions in crypto, especially back in 2018, had nowhere near the kind of capital that the institutional clients that we had in more traditional markets were, right? In traditional markets, you could get $20,000 a month for a data set. In crypto, a crypto fund doesn't even have $20,000 a month for all their expenses, right? So trying to figure out how do you capitalize on this market was a big challenge. But as we got deeper and deeper into the market, we realized that even more so than sentiment, like, nobody had any idea how to monitor these assets. Like, I went around to hedge funds and I was like, hey, how are you guys tracking the 30 assets in your portfolio, or even the 10 assets in your portfolio, or the other assets that you're watching? And they were like, well, we subscribe to 72 newsletters, and we go on this and this website, and we spend 20 hours a day on Twitter, and then we sit in Telegram channels and all these different things. And I was like, this just doesn't make any sense. Like, you can, you can go on Yahoo Finance right now. You can type in Apple and you can see their earnings, you can see their revenue, you can see their dividends, you can see their earnings calls, et cetera, right? And it didn't make any sense that didn't exist in crypto. And so we basically, in short, built technology that goes out to thousands and thousands and thousands of unique sources. So we parse through SEC filings, court cases, regulatory rulings, token issuer blogs, mining blogs, updates from Chinese VC funds in Chinese, like SEC filings of crypto funds. And basically what our tech does is it pulls in all that information, and then we're able to tell our customers, what are the most important pieces of information that you need to be aware of right now. And so our tech actually powers all breaking news at the two biggest crypto publications. So they're all using our technology to identify news, then they'll go write a breaking news story. For example, like the NYDFS giving PayPal a conditional bit license. Our tech picked that up 40 minutes before that made any sort of mainstream news. And so we're used by publications, by hedge funds, both quantitative that are using our API to trade, and discretionary, which are using our data to trade at their discretion. We work with researchers, law firms, token issuers, exchanges, you name it, but very much focused on people that want to identify market moving or critical information in real time, and then using sentiment data, quantify how the market is reacting to that information.
Okay, so you had mentioned before that you were using market sentiment data to more or less predict the movement of a stock, and you said, well, like a market is a market, right? Maybe this would be applicable in the world of cryptocurrencies as well.
Well, even more so, right? Because in traditional markets, right, you have fundamentals. Like Apple has earnings. If Apple has a good earnings, the stock's going to go up, right? In crypto, there's no earnings, right? Bitcoin's not going to have an earnings report. So sentiment matters even more, right? Where in a market void of fundamentals, the largest thing is the wisdom of the crowd, its investor sentiment, its community.
Sure. So, I have some questions about how you weed out noise from information that would actually become relevant to your clients. But before I get to that, I sort of want to focus in on this distinction between the sort of trader's mentality and the investor's mentality. What kinds of clients do you lend your service to first and foremost, or is it a mixed bag? Who is trying to sort of take advantage of the service that you offer?
We mostly focused. Oh, it's a big mixed bag. I mean, there's no client segment that's more than probably 20 or 30% of our business, so it's really mixed. But broadly speaking, traders. So we're focused on people that are making very short-term decisions. So our APIs as our sentiment updates every 300 milliseconds. So we are lightning fast. We're working with market makers and high frequency trading firms. We're working with guys where speed matters. And so generally speaking, we work with traders, but we're also helping research firms and more long-term investors really understand how much communities are growing and, the most notable developments or when to enter or exit a position. But generally speaking, the use case that works best for us is trading.
Sure. And then the idea is that you're sort of offering a kind of terminal that, people can go to, or they can they can subscribe under. It's sort of like a single domain, if you will, and you can have them. Do they go and they pick certain categories that would be relevant to the investments that they're making, and then you kind of pull from a bunch of different spots and you kind of funnel it into their account, or like,
Yeah.
what does the UI look like?
Yeah, it's a terminal, right? It's a data terminal. And so, there's charting and there's analytics and there's data, but there's also the ability to create very customized queries, right? So for example, show me every listing on Coinbase in real time, or show me every time these 30 assets in my portfolio have a partnership, or show me anytime there's a court case against any cryptocurrency, or show me anytime any hedge fund raises a new round, show me their SEC filing so I can see how much money they raised. And so it's very, very customizable. based off of the user. We have some default things that most of our users will like to see. So, for example, a lot of our users like to see all the news from China translated to English, just because if you're an investor out west, being able to stay on top of what's going on in Asia, I think is very critical. So there are a lot of things like that that most of our customers will look at, but it's a very customized experience to the user. And they can set those alerts, they can set those feeds, but they can also receive alerts on Slack, Telegram, Twitter DM, email, you name it. And so we work with only enterprise clients. So we don't work with individuals. All of our clients are B2B, and some of our clients will have 70 accounts with us.
So it's one thing to already kind of have figured out what data is relevant to certain kinds of decisions, right? And that's nice for your clients and your users to sort of have access to it. But
I mean, that's an ongoing challenge, though, right? It's a
right.
challenge on our end and on our users' end, right? Is what actually matters and what do you surface and what do you show, right? There's so much noise in crypto, and figuring out what is signal versus what is noise is a huge challenge. And at first, we kind of left it to our clients to figure out. We were like, okay, these guys are big companies with tons of users, but over time we realized, hey, you know what? There's just so much going on in this market. Our customers can't spend their entire day focusing on what matters. So we're building out a data science and analyst team that spends their entire day figuring out what exactly matters, what moves the market, so we can help our clients track exactly what is, the most critical information.
Yeah. So then I guess they're just going in and right, because there's like at any given point an infinite number of variables that you could consider, right? So
I mean, we're pulling in thousands and thousands of relevant news stories and pieces of information on a daily basis. I mean, we parse through, just on the Twitter end, 1 billion tweets a day. So the amount of data that's flowing through our system is tremendous, right? The big challenge is isolating out what's significant for our clients, and that's we help point them in the right direction, but we also help hold their hand and help them understand what we think is the most salient.
Sure. And as with most things, it seems like there would emerge this conception of a double-edged sword, if you will. And what I have in mind is, right, like it seems like the way that we're talking about it now is as a very helpful tool, right? It can help advance people in their trading decisions and their sort of investment decisions. But is there any risk that you see that comes on the sort of heels of boiling this down to like a precise science, such that maybe the worry would be that people would figure out how to go out and like manipulate data so as to manipulate the market?
No, because it depends on our thing. But for example, if we're telling somebody that when the New York Department of Financial Services approves a large company for licensing that has a positive impact on the market, nobody's going to spend $1 million going and getting an NYDFS approval, right? Just to move the market, right? So it's not really a concern. I can get into Twitter and how sentiment works, but they're two totally separate concepts. In your mind, kind of take Twitter out of the rest of what we do, which is pointing out the most significant developments. But it's things like Coinbase listings, right? You can't fake a Coinbase listing, right? You can't fake a partnership announcement with Microsoft, right? So there's some things that are just not fakeable. There's obviously some things that if some bad actor really wanted to do, they could do, but there is so much untapped alpha in this space. There's so many different places to look for information that there's not one place where you could just try to trick our users into doing anything. I mean, our users are doing some level of diligence before making any sort of investment decision.
Sure. Yeah. And that makes sense, because it seems like most people that would be coming to utilize a service like what y'all offer, right, you're not coming into that as a newbie. You would presumably have your bearings about you in such a way that it's just kind of it's a tool to kind of amplify things that you may already feel competent in doing.
It's helping to surface things that either move the market. It's really what we help our customers do. We think of two things, right? The first is that we help them access market moving information first before anybody else has access to it. And the second is we help them understand and contextualize why the market moved. So a lot of times our clients will come to us with the question, hi, I saw that the price of this asset went up by 30% today. how can we use your data to explain that movement? And you can't always, right? There's not always an explanation with data. Sometimes with smaller altcoins, it's just somebody bought a lot, right? And the price went up because it's more liquid. But we really help our customers do is contextualize why the market behaved in certain ways so that going forward, they can recreate that and they can be aware of those types of developments so that they can take advantage of those, kind of on a go forward basis. But yeah, generally speaking, our clients tend to be, sophisticated. We only work with enterprises, but that said, we work with some companies that are new to the crypto space as well. They come from the equity world and they're like, hey, I'm used to seeing, stock splits or dividends, for equities. How do I see those for Bitcoin? Right. Or how do I see those for crypto? And we'll kind of explain things in more of a traditional financial sense. But yeah, generally speaking, somebody either has deep crypto experience or deep traditional finance experience before coming to us.
Yeah. What in at least the last year, 2020, what have y'all noticed to be the most relevant data points for the way that the market's been moving here?
Yeah, so there's a few things. We actually put out a bunch of research with eToro on this. So if you just Google crypto quarterly report, the first thing that will come up is the Thai quarterly from eToro's website. And we did this research on what significant developments actually have the biggest impact on price. And the thing that we found that had the biggest impact was actually mergers and acquisitions. So for example, FTX, when they acquired Blockfolio, that had a really strong positive impact on FTT's price. We'll see how that trend continues, but kind of interesting to note. There are some things that were notable as well. So, for example, partnerships. We've seen that. Hey, Chainlink partners with Google, and the price goes crazy, right? And what we've seen with partnerships is certainly there is a lot of short-term price movement, but that's the least sustainable type of development in the space. So you basically the average price movement after a partnership will look like this: the price goes whoop, and then it drops right back down. And oftentimes to below the pre-partnership level. Something else to note that's important, and it's not really a development in and of itself, but is just that community matters, right? And this kind of relates back to sentiment. The reason that Ethereum or Bitcoin are the biggest cryptocurrencies has nothing to do with the technology. I mean, certainly that may be some aspect of it, but it's because there's a community, right? There's no way Bitcoin can be the best tech. I'm not a developer, but it's been around for 12 years. In 12 years, I mean, remember what iPhone came out 12 years ago, right? Like just the tech is obviously developed, but the reason that Bitcoin has held so much value is because of the community that's been built around that and the amount of people that believe in it and the number of people that believe in it. So if you kind of want to talk about long-term sustainable, value and value accrual for tokens, it's how big of a community can they grow of organic, real followers, not fake accounts, right? And we've seen that certainly with Chainlink and the Link Marines, where a bunch of years ago, their follower count started to grow like crazy, and the number of people talking about them started to grow like crazy, and that led price movement. So certainly something that we've seen as well is, having a big community, a number of people talking about you, as well as having large investors, right? Having, VCs that also sit on the board of a company like Coinbase, right? Or closely involved and can get your asset listed on those exchanges, have an impact. And on that, on that note as well, exchange listings, in specific on Coinbase, Upbit, Binance, OKEX, and, a couple other platforms have very strong price movement, with Coinbase being the largest.
It seems like a lot of these things that we're sort of talking about touch on very short-term market volatility, right? And I know that there are certain people that trade in markets like this that are very convinced of a certain, consistent trajectory over the long term. So my sort of question in this regard to you is, do you think that a technical chart just represents market sentiment? And if so, is what explains the sort of long-term consistency to the way that the market moves a sort of consequence of there being tiers of sentiment that go from, something very general that map on more consistently to the long term, and then it kind of trickles down into these sort of year, monthly, weekly charts?
Yeah, I mean, we don't touch technical analysis. I for what it's worth, I think a lot of technical analysis is garbage. I think drawing price on a chart and then trying to figure out where price is going to go next is nonsense. I think that price movement boils down to a few different things. It boils down to whether or not, there are buyers in the market, right? Whether or not there are more people buying, whether demand exceeds supply, right? And just because there was some pattern in the past doesn't mean there's going to be a pattern in the future. If there's no buyers, that pattern isn't going to exist. So in terms of, in terms of where I kind of see, sentiment playing out, I look at sentiment as a much shorter term metric. I think community growth is certainly important from a long-term point of view. I think it's very, very, very difficult to predict where the price of Bitcoin is going to go in the next hour, let alone in the next week or the next month or the next year. So we focus at the longest time frame. We help our clients try to predict where the price is going to be in the next month, and that's at a very, very, very long scale. But we're very focused on short-term price movement because it's a lot more predictable. There's a lot more patterns, and there's a lot of things that we've noticed over time tend to kind of help predict, value in the short term. But if you look at the long term, for example, like you could have the US government shut off fiat on-ramps into crypto, and it wouldn't matter what a technical chart says or what sentiment is. If fiat on-ramps are closed, right? You can have all of a sudden, I don't know, name X giant pension fund decide to allocate 2% of their portfolio into crypto, into Bitcoin, and that fundamentally changes the dynamic of the market, right? So I think trying to look at, long-term trends is very difficult. I think that there's a number of things that you can look at and be bullish about the long term. Like I think looking at and seeing all these institutions coming in are certainly bullish. Looking at the macroeconomic landscape and seeing how much of a disaster traditional markets are and the amount of money that we're printing in the US is certainly bullish. Looking at the size of, looking at the fact that Bitcoin's community is not where it was a few years ago, and the fact that, I have a belief that it will start to grow once price, exceeds 20K, that's bullish. I think there's you can look at a bunch of factors and say, hey, these are bullish factors. But I think then taking that and whittling that down to, hey, this is what's going to happen to price, 6 months from now, when somebody comes out with, oh, Bitcoin's going to hit $427,000 by X date. We've seen, from the last few years that every single person that put out a prediction is wrong. And if one person was right, they got lucky.
Sure. Yeah. So it's not, yeah, like, I like the focus of it being about, learning how to be dynamic and sort of pay attention to market sentiments and sort of news that's coming out so that you can make more informed decisions in the sort of short term, as opposed to sort of, fully relying on breaking charts down into like a formula that you sort of think are going to be inductively reliable just because it looks as if it played out a certain way in the past. So it's about sort of, I guess, helping your customers feel empowered to make those decisions by encouraging them to sort of keep their eye in a certain spot here and there.
Yeah, it's letting the data help drive you, not your gut, right? Letting, for example, seeing that, X coin just was 51% attacked. Instead of looking at a technical chart, let's look at the last 10 times a token was 51% attacked and what happened after an hour, 24 hours, 7 days, 30 days, et cetera. And let's use that to drive our decision making, right? And so it's really, we both actually work with funds and others to help them predict what the impact is going to be, but we're also working with token issuers as well. And just like we can predict what types of events will have a certain impact on the market, we can recreate that for token issuers. And we can say, okay, wait, should you guys be focused on technical developments or partnerships? What has a bigger impact on price? So we can also help token issuers on the other end of the spectrum make more informed data-driven decisions on what is likely to, be most beneficial. I don't want to say for increasing their price because that's the wrong way to look at it, but for growing their community and having the, being able to be the most long-term sustainable. So it kind of goes on both sides of the coin.
Right. It's like, if you can help it, you don't want to launch the announcement of your project or your token at a sort of point in the market where people are just pissed off because, everything else is performing poorly and then everyone's distracted, right? So like you want to kind of be attuned to what would be an opportune time for your business, right? To sort of
right. It goes with marketing, right? When you're trying to optimize marketing, right? And you're trying to engage your community, it's the same thing, right? And so, we think of it as, being able to optimize your, marketing, your PR, your investor relations in crypto and with a very data-driven approach.
Awesome. Now, on y'all's website, I noticed that y'all have a portion entitled your statement on ethics, or it's your ethics statement. Maybe you can tell me a little bit about that. Why do you think it's important to sort of include something like that on your website specifically? And why is it important in general for this space to maybe bring that into the discussion more often than it probably does?
Yeah, I mean, I think we may actually have been the first company in crypto to put out an ethics statement. We did it a couple of years ago. Yeah, look, it's super important. I mean, the biggest thing for us is we have so much data, and I don't want my customer to think that we're front running them. So our employees and mostly our significant shareholders do not trade. I do not trade. I have long-term holdings. Like I hold Bitcoin. It's in cold storage. I don't trade it. And none of our employees trade it. We don't front run any of our customers. We don't use any of our data because we don't want any of our customers to think that we have some sort of unfair advantage over them. All of our customers, whether they're direct customers of us or we have some customers through partnerships that are more retail. So whether they're direct customers of us or retail partners, they all receive information at the same point in time. We don't receive anything first, so I think it's super important. But I also think it's important to clean up this market, right? And I think we've certainly done a decent job at that, which is why institutions are here. But there was just so much crap that existed in 2016, 2017, 2018, right? And we need to prove that, hey, we're professional, we're responsible. We understand that, look, as much as I'm libertarian, there is a place for regulators in crypto, right? There is a place for the SEC and the CFTC to protect investors, right? And we're not going to exist in a world that's free of regulation. So I think, proving to regulators that, hey, we're a clean industry, we're cleaning up our act, we're being compliant. If you are a exchange, you are doing things like market surveillance, you're looking at, on-chain analytics to make sure you're not doing business with money launderers, right? Like I think, portraying that to the general public is great. Because what happens is the mainstream media likes to pick up on the trash. They like to pick up on the money laundering and the crime and the this and the that, even if it's a tiny portion of crypto. And it really is a tiny portion. And Chainalysis actually has some good insight on this. They have this website called Chainalysis Market Intel, and you can actively see the percentage of Bitcoin that's from illicit transactions. But my point being with all of this, like we need some positive signaling. And we need the companies that are trying to do the right thing to kind of, be at the forefront of this industry, not, the companies trying to, scam individuals and retail users out of money. Because I think once we see this bull market coming back, which I think it seems like a lot of people agree we've started to see, we're going to see a lot of scams again. It's just going to happen. It's inevitable, right? So, making sure that that's not the norm is kind of our focus.
That would be an interesting stat to track. How many billionaires are publicly announcing that they put their money into some sort of crypto asset compared to how often it's slandered in the news?
Yeah, it's probably slandered in the news more, but it's getting much better. I mean, it really is getting much better. I mean, my Twitter, I made my background on my Twitter. Jamie Dimon says that Bitcoin is a fraud. I don't know if you remember that back in 2017, but just funny to see how far people have come in their understanding, and also the understanding that Bitcoin is easier than the U.S. dollar to track. And so if you're going to try to launder money, you probably shouldn't use Bitcoin. It's like the worst. It's the worst way to launder money. Like it's an absolutely terrible way to launder money. The second you KYC, right? The second that you put your ID on an exchange, you will be caught, right? And so, I think helping the market understand that, you can't really launder money. It's hard to use Bitcoin for criminal activity. If you want to, Monero and Zcash are out there. There are other more privacy focused tokens, or use some shitcoin nobody's tracking. But the Bitcoin isn't good for that. And I think we need to kind of change the narrative and make sure this time around, the narrative is focused on institutional adoption. It's focused on being serious, on being compliant with regulation. And I think that by doing all that, we can get our Lambos and we can moon, right? I just want to make sure we have the infrastructure in place so that we can hodl for our Lambos, right? I don't think we had that a few years ago.
Yeah. What do you think is one of the biggest hurdles that the entire industry faces right now to kind of, I guess, achieving the levels of mass adoption that a lot of people would hope it could reach?
I think we have a lot less barriers than we had before. I think we are way, way closer. And I think that apps like the Cash App I give so much credit to Jack Dorsey and Square for what they've done and how easy they've made it to onboard and to buy Bitcoin. PayPal and Coinbase and Gemini and all those different fiat on ramps are tremendous. They're tremendously helpful. It is so easy to buy Bitcoin, to hold it. So I think, the first thing is, I think that's great. I think we need more of those. We need easy user experiences. I really think we need to boil it down to the fact that you don't need to understand everything about Bitcoin to buy it. You don't need to understand how a blockchain works to hold Bitcoin, right? And I think we need to stop throwing out these giant, fancy, complicated words. If we're, I obviously sell to a different clientele, but if we're going out to retail and to your average individual person, it's simple, right? The argument is, look, you see our government is printing so much money and this world is in turmoil, right? Do you want to hold the US dollar, right, when this world is kind of ablaze in fire? And we've printed, we in the last year, we printed 20% of the total US dollars that have ever been printed ever in 1 year, right? And just think, how that's going to inflate US currency versus, Bitcoin has been around for 10 years. It's now proven, it's trusted. You have all of these incredibly intelligent people in the space that have been in the space for years coming into the space, and it's a hard capped asset with a supply of 21 million. And what you're doing is you're buying, a hedge against this uncertainty. And the people that are coming in and buying now are people that are buying to hold, right? And so every single Bitcoin that gets sold is another Bitcoin that you can't have. And we need to start telling that narrative. And I think we need to tell a narrative that gets people into Bitcoin and not altcoins. I think it's great. We service clients that trade altcoins. If altcoins didn't exist, I'd have no business. But we need to simplify it and say, hey, there's an argument for Bitcoin. If you want to start degenerate trading altcoins, because that's what most altcoin trading is, be my guest. It's a great time. It's super volatile. There's a tremendous amount of money to be made. But I think it's simplifying the argument for Bitcoin. I think it's making sure that everybody is compliant with regulation. I think is incredibly important because we can't have more BitMEXs. I think, making sure that, that all these exchanges and platforms are being penetration tested, right? So they're not going to get hacked, making sure platforms like Coinbase aren't going down. So on one end of the spectrum, right, it's making it easy for customers to understand and to onboard into crypto. And I think the second thing is just to continue to expand our impact in the institutional world, continue to drive interest into the space. And I think we do that by just going down the path that we're on now. And I think that, hopefully regulators stay on the right path. I think they are on the right path. And hopefully we see something like a Bitcoin ETF get approved because I think that will be positive. So I don't think there's any massive barriers yet. I think it's a matter of time, not a matter of, if it will happen.
Well said. And, on a related note, but from a slightly different angle, what do you think 2020 has done to kind of accelerate the success of blockchain technology, cryptocurrencies, et cetera?
Yes. So I can't speak to blockchain specifically. I like to, in my head, I separate out crypto from blockchain. Bitcoin introduced the idea of the blockchain. It was built on a blockchain. I don't know anything about underlying blockchain technology. I could not tell you how any protocol works. I have zero clue. But in terms of crypto, I think it's tremendous, right? I think it's unfortunate that this is what accelerated the adoption, but it's tremendous, right? If the world didn't burn down on fire because of coronavirus, the nonsense around the election, the nonsense around, Trump not conceding and, everything that's going on there, right? And all the fighting and, if that didn't happen, we wouldn't be where we are. I mean, I think that gave us I don't know, I'm throwing at a random number here, but 2 years more, we're 2 years ahead or 3 years ahead of where we would have been because of everything that happened, because of the world kind of blowing up. And in a world that's gone mad, Bitcoin really makes sense. So I think, the short answer is it's been incredible for the industry.
Yeah. So it's almost like it's passed the test, right? We kind of were forced into a situation where, it was meant to thrive in.
Well, yeah, I mean, Bitcoin was born during the last economic crisis, and it was born, as a hedge against that, and a hedge against the banks, and a hedge against inflation, and all the money printing, and all those kinds of things, right? And certainly in the original white paper, it talked about, being electronic cash and whatever. Let's just ignore all that and forget that ever existed. But the point being, it was born during this, this turmoil period, and we haven't had a period of turmoil since then. And the first turmoil period that we have, that's when we're starting to see this real adoption of Bitcoin.
Yep. Bullish signs. Now, let's set our sights on the future. with all of that said, where do you think we're going to be this time a year from now? What does 2021 look like and beyond? Do you have any thoughts on DeFi?
Yeah, I don't give any price predictions, because if I give a price prediction, I guarantee you I'm going to be wrong. And I have no idea. So I have no idea where price is going to go. If it means anything to anybody, I'm not selling. So if that gives you a sense of where I think or hope price is going to go, I've no plans on selling at 20K or 25K or any other number like that. I'm a long-term holder. In terms of what I think is going to happen in the space, I think we'll certainly see a lot of institutional adoption of Bitcoin. I think what will happen is we're going to see a mega retail rally again. I think that's going to follow. And I think there's going to be a tremendous number of shit coins that go up a tremendous amount. And the reason being is every time what we've seen is Bitcoin has this giant run up, right? And then it kind of gets stagnant, and then altcoins follow. And because altcoins have less trading volume, when people start trading altcoins, the price just runs up even more. And we've seen that with Stellar and with Ripple and with other assets more recently, right? Where Bitcoin's stagnant at like the 18.8 to 19.3 range. And so we're starting to see, this run up in alts. And I think we're going to see that again, right? I think that's going to be retail driven. But I think people are going to look at the price of Bitcoin and be like, oh, it's, X dollars, it's too expensive. Let me buy this token that's 2 cents, even though, don't focus on price. That's the biggest thing I want anybody listening to take into consideration is the price doesn't matter. The percentage change in price matters. So if something costs 20 grand, but it's going to go up 500%, and something costs 2 cents, but it's going to go up 10%, you'd rather have the thing going up 500%. So better to own a fraction of something more expensive than to own a lot of something cheaper, because it's not actually cheaper. It's just, it's not, right? It's all you care about is the percentage change, right? It's not necessarily a better deal. But I think, to that point, that's what I think we'll see. I mean, with DeFi, I think there are some things that are certainly interesting. I don't have any long-term perspective on DeFi just because of all the hacks. It's just constant. It's just these protocols constantly get hacked and hacked and hacked and hacked. I mean, we saw 5 hacks in Q1. We saw a couple hacks in Q2. We're seeing more hacks in Q3. Most recently, Pickle Finance getting hacked for $20 million. So I think I'm kind of in a wait and see mode. As it relates to DeFi, I think we need to see these code become more audited. We need to see, how sustainable this is. But I certainly think there's some interesting innovations going on there. I think this ETH 2.0 thing is going to be a little bit interesting. Kind of everybody's in a wait and see mode there. I think, some of the new launches like Filecoin, potentially interesting to see if anybody's actually using it. But yeah, I mean, I'm in my head, I'm mentally focused on Bitcoin. Everything else is a distraction at this point.
Amen, man. Joshua Frank, co-founder and CEO of The Tie. Joshua, thanks so much for taking the time out of your day to chat with me. It's been really interesting to hear about what The Tie is doing and how y'all are, really homing in on market sentiment. And, it's fun to see how y'all are utilizing that and offering it to your customers. Maybe before we sign off here, what's the plug? Where can people go to find out more about The Tie, social media handles, etc.?
Yeah. So, as mentioned, we mostly only focus on enterprise clients. That said, we have a free newsletter that anybody can sign up for. It really is good. It's great. I don't write it. If I wrote it, it wouldn't be good, but my team writes it and they're way smarter than I am. And so if you go to blog.thetie.io, you click on the latest weekly insights. So that's blog.thetie.io, THETIE.io. You can go to weekly insights, click on the bottom. You can subscribe, totally free, comes to your inbox every Monday. You can follow us on Twitter @thetie.io. We also have a podcast, which I host, and that podcast is called the Fundamental Value Podcast. So actually a bit related to this conversation that we just had, but the entire premise of the podcast is going out and asking hedge fund managers, CEOs of exchanges, et cetera, how they look at fundamentals in crypto and how they think about valuation. So if you're thinking about investing or learning more about the space, definitely recommend checking out on Spotify or Apple, Fundamental Value Podcast. There are lots of great guests, and you can follow me, I think, on Twitter @Joshua_Frank_, I think, or just follow my company. It's more interesting than I am.
Joshua, thanks again, man. I'm Tyler Olsson, Reimagine 2020. Everyone tuning in, stay tuned and happy HODL days.